Good morning, everybody, and this is your Dow Jones day trade setup for today. So the noise came out yesterday, and markets was shocked to see that the Feds are becoming a little bit more hawkish. For those of us that have been watching the charts and watching the structure of the charts from a technical point of view, you know that writing was on the wall for quite some time. So the trick right now is, where is the buying opportunity? So we had this massive sell-off yesterday, and I say massive because it's in just relation to the previous bars, but I suppose it's not really that big a sell-off for us, 1%. Okay, so it was a reasonably big sell-off as 1%. But I think for me at the moment, what we're looking for is an area of support. Now, this picture doesn't look very good on the daily. Oscillators have eased off, which is quite nice. And on the weekly, we've crossed over and we're pointing down. So, yeah, looking at the weekly, obviously a nice, decent pullback would be all the way down here to 31,300 area. That would be a fairly decent area to be buying back into the Dow. But whether that happens or not is another story. I think all I really want to do here is just pick up that structure there, because that is the trend line, and that is somewhere around 3,300. So let's just get down to stuff that we can trade at the moment. Right, so looking at the 3 hour, we've been drifting low for quite some time. This week has been a couple of drifting lowers. We do have this double top that I was talking about earlier in the week, which is there. Let's just see whether that target has been met. Not quite yet. So this area here is definitely something we need to pay attention to, and there is the double top target. So it's these tails right here. Okay, so yeah, that's kind of the view that we have there. I think let's just get down to the hour, because that's going to be the area we need to pay attention to the most at the moment. Okay, so we do have these two gaps. I wouldn't be too surprised to see the daily gap close to start with. Look at the oscillators, not an area you want to be selling into at the moment. I do think we should go for 33,800 at least, 33,800, 33,727. So between 33,800 and 33,700, that's kind of the area that I would expect us to find some support in. So first leg down, I would expect a bit of a retrace and then get another leg down into this area. Now, what we need to wait for is everybody to digest what the Feds have said. And basically all the Feds have said is that they're looking at raising interest rates sooner than what everybody's expected. But that writing was on the wall for some time. We've got a whole lot of people just sitting at home living on handouts at the moment. And then you've got so many job openings open. So yeah, they've got to do something to start stimulating the market a little bit. So the sell-off, not a problem. It's linked to the dollar. The dollar strengthened dramatically yesterday, so that this move down was linked to that. But still, you can see there's still tails up, tails down, still confusion in amongst that. So I think what you'll see today is the news will get digested. Once it's digested, we should, I think, sort of probably drift aimlessly a bit and then come down. We've got the jobs number today as well, so you probably find a lot of people sort of hanging on to that information as well. So nothing worth shorting here, nothing worth going along either. So I want to see a little bit more structure before we start going along on this. And there's no structure here at the moment. So sitting quietly, waiting for my opportunity, and 33,800 and 33,700, somewhere in that area will definitely present some sort of opportunity as far as I'm concerned. So that's kind of my view at the moment. I just want to close off with gaps just to see what kind of gaps we have here. And I need to put a level at the bottom so I can see where we are. You can see how the oscillators are separating like that. Probably head towards the gap and then drift lower again. And I just want to see these three areas to the left, see what we have here. I seem to remember a couple of gaps down here. I don't see any. Might be a small one over there. But other than that, doesn't look like there are many gaps lower down in this area, but you can see a bit of congestion here. So yeah, I think that's kind of my view at the moment. Just wait for the European session. Let's see what happens. There are gaps. Yeah, there's a gap there though. So I think this is really just going to be a flag back to close the gap, and then Europe will probably panic a little bit and drive us a little bit lower. So every step lower is just another opportunity to buy into this. We've been going up for 13, 14 years. I don't see that changing now. I don't see the Feds allowing that either. So they've been driving it up for the last couple of years, and I don't see them stopping that at the moment. So anyway, that's kind of my view right now. It's starting to look interesting, starting to look for opportunities to buy back into this, but not where we are now. So wait for, it should be another leg lower. And the question is whether we can hold this 33,700 level. If we can do that, that would be bottom of range. And that's kind of what I was expecting this year, is to get us into a range. So that would be bottom of a range and then back to the top of the range again. Anyway, that's kind of my view at the moment. Hope it helps you somewhat, and we'll catch up with you later. Cheers for now.